How should we look at these numbers? I mean, it's their own forecast that they're beating, so maybe that's not so impressive, but they didn't miss it.
Sure, and you take the victories even if you set them up yourself. But the real factor is going to be the Model X SUV coming in the second half of the year, and if that's on time and on target is probably more important metric than what we saw for the first half of the year.
And yet a substantial difference, Matt Miller, in terms of the growth rate. The number I look at is sequential growth. I don't think year over year is, you know more about cars than I'll ever forget. But, or you'll forget more about cars than I'll ever know. But the year over year thing, it seems to me at this stage of the company, the right way to look at it is quarter over quarter.
Well, if you want,
is that fair or no?
Yeah, absolutely. And that's the way analysts in the industry are looking at it as well. You've got about a 15% growth second quarter over first quarter. So even though they only sold about, well, less than 40% of the cars they have forecast for the full year, they want to sell about 55,000 in the full year, and they've only sold about 21,000 so far in the first half. They only have to grow about 12 or 13% in each of the next consecutive 2 quarters to meet their projections of 55,000. And let's face it, it's all about the Model X for Tesla right now. If it comes out in this current quarter, or at least at the beginning of the next quarter, that should put them easily at their target of 55,000 because the demand is huge and the orders have already flowed in for that model.
I assume, Kevin Tynan, that the way that these sales sort of roll out is kind of like an oil well, where the most production happens right after the new release. This is a new car they started selling in the fourth quarter. They had big sales there, slower growth in the second quarter, a little bit better growth in the third quarter of the car's sales. That is the revamped all-wheel drive vehicle. Is that fair to say that when we see the Model X, the biggest quarter will be that first quarter when the demand is high?
Sure, and you're gonna fill those back orders, those customers that have put down their deposit and are waiting in line to get the vehicle. Certainly not going to be another inexpensive vehicle, just like the Model S is. And I think when that Model 3 comes out, depending where those units are transacting at, is going to be the biggest deal in terms of long-term volume growth. Very difficult in terms of Model S and Model X, which probably will be close to $90,000 in revenue per unit as you add options. So if you're looking for longer term volume, it's going to certainly come at lower price points than what we're seeing now.
In other words, the $100,000 car, the $75,000 base or whatever for the Model S, but basically $95,000 is about the average cost per car. If it's going to be a $90,000 SUV, you're saying the real market is for the Model 3, the Tesla 3, Matt Miller, that is expected. Well, when is that expected, Matt Miller?
The Tesla 3, by 2017, they should have them in production and be heading out the door. I was going to say in dealers' lots, but it's not really, doesn't really work like that, obviously. I am not sure how profitable that car is going to be for them, because keep in mind that for the Model S, for example, which starts at around 70,000 without any options and choosing the cheapest version, more than half of the cost of that car is in the battery. And I think a lot of what Elon Musk and investors have been banking on for Tesla is that battery costs would come down, or battery power would double, kind of like...
Wait. So if half the cost of a $70,000 car is a battery, half of $70,000 is $35,000, which is the supposed price of the Model 3. Like, they can't cut the cost to zero. Maybe they can cut it 10%, maybe 20%. That doesn't get to zero.
Well, they hope, obviously, that battery costs will come down and that battery capacity will climb, but it just hasn't been happening in a way that Silicon Valley is kind of used to. You haven't got this Moore's Law of battery capacity.
There is no Moore's Law of battery capacity. Kevin, sorry, I want to go back to the chart we brought up for a minute here about the timeline of what Tesla has said about the shipping date of the Model 3. Because I think this is really important. I don't think people have focused on this much. I think, this is just me, that the timeline's slipping. Because in March 2014, Elon Musk said it would be in 2017. And then later in February, he said it would be the second half of 2017. And then in May, he said it would be late 2017. And then the CTO put up a slide that said it would be 2018, and the company explained to me, well, full production won't be till 2018. That sounds to me like they're pushing this thing out because they're not getting the advances that they want, Kevin Tynan.
Yeah, and look, and to Matt's point about Model 3 being profitable. Obviously, that's not initially what's going to be important. It's that they get the product to the market. Obviously, the market hasn't cared about profitability to this point anyway. It's about eventually hitting those volume targets. And I agree, the range is supposed to be 200 miles, so you're not talking about the battery pack that you would see in a Model S or a Model X, so there will be cost savings there as well. But these are high hurdles. You know, the Gigafactory is a big deal. Driving those battery costs down is a big deal if you're going to do a vehicle that is targeted to start at $35,000.
I also want to point out that if you're an investor or even an analyst here watching Elon Musk, you by now understand the pattern that he maybe doesn't overpromise, but he definitely promises things a lot earlier than they come. I mean, you see it in the Model X, you saw it in the Model S. They have a pretty standard habit of saying we're going to put a vehicle out this year, and no, we're going to do it next year, and then it'll be the first half of the year after that and the second half of the year after that. I mean, this is normal. You can almost set your watch to how late they are on every product release.
The difference is Wall Street analysts are not doing that. Wall Street analysts are building their models based on those numbers. We got